U.S. regulators approving a unique special purpose acquisition company structure from investor Bill Ackman. Instead of a SPAC, it's being called a SPARC, for Special Purpose Acquisition Rights Company. Ackman will inform investors of potential deal before they decide to pledge funds. And Bill Ackman, who made a lot of news over the weekend about what he might want to do with this fund, joins us right now. He, of course, is the founder and CEO of Pershing Square Capital Management, floating the possibility of maybe trying to take X, formerly Twitter, public with Elon Musk. What's going on?
Only good things.
Only good things. Let's talk about this fund, and let's talk about some of the headlines you made over the weekend, because this structure was approved, and one of the names that's been floated, I believe, by you, we talked about in the 6 o'clock hour, was the possibility that you might want to take X public via this fund.
So maybe we should back up a little.
Okay.
So if you think of a typical IPO, right? You've got to sort of expose yourself to the world with a prospectus well before knowing whether you can raise any money. And then you're subject to the market. And if the market's there and the shareholders, the investors like you, stars align, you raise your money. You don't know what the price is, you don't know how much, you don't know whether it gets done. That's the typical deal. What we've done is we kind of reversed that whole process. Imagine a world in which you sit down with an investor. The investor does due diligence on your business, likes the management, says, you know what, I'll invest $1.5 billion at $25 a share, regardless of what the market does between the time we file with the SEC and the time the prospectus gets approved. What do you say? Well, I think every IPO investor would say that sounds like a pretty good deal. I said, what if you need, so we'll guarantee you $1.5 billion, we'll guarantee you a fixed price. And by the way, if you need more, we have a whole bunch of other investors who've, like us, who've invested alongside us before, and they're going to get to invest at the same price. What do you say? And that's what we call Pershing Square SPARC Holdings.
Right. That's what this new fund effectively.
It's not a fund.
It's really a structure.
Called a structure. Yes.
And let's just talk about the history of the structure, because it really came out of a SPAC. Dare I say a challenged or even a failed SPAC, if you will, which was an effort to buy Universal Music. Effectively blocked of sorts by the SEC. You ended up still buying that stake in your fund itself, which has been, I believe, a successful investment for you.
It has been, yes.
But explain what the SPAC to SPARC piece is, because the SPAC piece has a lot, I think is...
got a bad name.
It's got a bad name.
Sure. So the story here is we set out to create a much better version of a SPAC, what we called Pershing Square Tontine Holdings. And people liked it. And we had $12 billion of demand for a $4 billion IPO, so we picked a who's who of investors to be our investors. 2 years later, we were not able to deliver because the SEC ultimately did not approve the somewhat unusual structure of the Universal Music transaction. So what we said to them at the time is we said, look, apologies, not a great outcome for us, but we're going to give you a ticket to a new party. We have a much better idea for how these entities should be structured.
You returned all the money, though.
Returned all the money.
But you gave them, you returned the money.
And we gave them a ticket.
Gave them a ticket.
And the ticket said, when we get this thing approved, what we're calling SPARC, you get to be the first in line. And so the approval that happened on Friday, in effect, enables us to distribute these rights to shareholders. And they won't trade unless and until we find a great business to buy. We negotiate a deal. We enter into a definitive agreement at a fixed price. We commit, Pershing Square funds commit, let's say $1 billion. And let's say the company wants to raise $5 billion. We commit $1 billion.
Right.
We set the rights price. There's 61 million of these rights. Each one can buy 2 shares. So think 122 million rights. Want to raise another $4 billion. We set the price at, let's say, $35 a share. So the company now knows they're going public. They now know the price. And so the first public disclosure is we're going public. We know the price. We know we're raising the minimum amount of capital we need. And then we file with the SEC. We get the prospectus approved. We do a little roadshow, and then the rights begin to trade, and people can invest at the same price as us. There are no underwriting fees, and there's none of the typical risks of an IPO.
So enter this idea of X. So one of the things you told the Wall Street Journal over the weekend was that you would be open, absolutely, you said, to using this vehicle, if you will, to take X, Elon Musk's, formerly Twitter, public.
Right. The history here is they were writing an article about my tweets they've been working on for a couple of weeks. And then when they saw this filing, I think they decided to, well, they certainly asked me the question, would we use this kind of vehicle to take X
So how interested are you in taking X public? You invested, I should say, in Twitter when Elon Musk bought it, correct?
Yes, the Pershing Square Foundation made a very small investment relative to the size of the deal. $10 million in a $40 billion deal. So
and would you like to buy it?
So the answer is I have a lot of respect for Musk. I think Twitter is a really important platform. I think he's made tremendous improvements to the platform. And I think it's a unique, very difficult to disrupt kind of asset, and one that could, grow. And he's obviously going to pursue different lines of business. So I think it's quite interesting. I don't have information on how the business is doing. I have no idea whether he has any interest in doing something.
Have you spoken to him about it?
I have not.
So this is just...
They asked me a question, would you consider it? The answer is absolutely, because I like the business, I like Musk, and I think it's important.
He's got a lot of debt on that company.
Yes, and that's where this structure is
$13
interesting.
billion.
It would be hard today to try to do a $13 billion IPO, let's say, to pay down debt. What's interesting here is we could commit Pershing Square $2 billion to a transaction, set the rights price, they're $121 million, right? Set it at $100 a share, and announce a transaction. He knows he's going public. He knows he's raising $2 billion, which certainly helps. And then we tell the story, and then the rights holders have a chance to decide whether to invest. As long as the rights have positive value, if they're trading in the market for $1, they're all going to get exercised. And the IPO raises $13, and $13 billion. And the investors are a who's who of, if you go back and look at the people we raise capital from, just look at the 13F list for Pershing Square Tontine Holdings, it's a who's who of institutions, family offices, as well as a million retail investors.
Musk paid $44 billion for the asset.
Sure.
What do you think the asset's worth today?
I don't know. I have no information.
But would you buy it at $22 billion? Would you want to own it if it was $10 billion? Would you own it if it was $5 billion? You are a user in a sort of Peter Lynch kind of approach to investing, meaning so buy the stuff you like.
The product's vastly better than it was before. The cost structure is vastly improved versus what it was before, obviously. I think the rate of innovation in terms of new features, the pace of innovation is much better than it is before. I think where they've been harmed is they've lost a lot of advertisers. And I think the advertisers are likely to return, because I've actually bought stuff that I've seen advertised on Twitter. So it actually sort of works.
Right.
It's also an audience that's quite difficult to reach. I don't really watch TV. I read perhaps FT Journal, those kind of newspapers, but it's a unique way to reach a lot of, I think, very good users.
And if not
from an advertiser's perspective.